Hello traders, Gary Wagner here, just before 10 o'clock in Honolulu, 4 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is May 13th, 2016, and this is the daily report for gold and silver, in which we combine it with trending markets on our weekend review. Gold having a nice upside surge along with the rest of the precious metals complex today. After witnessing about a $10 drawdown yesterday, we're pretty much seeing that come back into the market today. Gold currently up about $10 on the day, $12.73, the low $12.63 on the day, and the high $12.76. So traders, the first chart that I do want to look at on today's show is a simple daily chart, standard candlestick format. This, of course, is COMEX Gold, 1275.20. That appears to be where we will close for the week. No doubt we are in the market. We are long roughly at this point here at 1275, 1276. We currently have our stops at 1257. Now, we did have a low yesterday of 1264, but if you recall from yesterday's show, I spoke about the fact that I really believe that 1260, that area is going to hold and should be an effective support level. Now, that is based upon a simple fib retracement. That's this fib here at a 61% retracement point, 1259.80. And what that's looking at is the onset of the rally, which really occurred at about 1228 up to this top at about 1305. I think I have it pressed a little bit higher. I will go ahead and adjust that. When we do that, we get a 61% retracement at roughly 1259. So traders, as you can see, I have adjusted the upper level of the fib retracement to reflect the actual high at around 1306. Numbers don't change a lot. Support still right around 1260. Here we have 1258.10. Now, the other thing that we have noticed in this market, and as you can see, I've put in a couple of trend lines, and of course they're sloping or cascading trend lines, this being our current level of resistance that is drawn from these series of highs here, and then we have a support line that comes in from these series of higher lows. So we've had a series of higher lows, we've had a series of lower highs, and that always, as far as I'm concerned, spells compression. As we reach the apex, which we're very, very close, we should get a release of energy. And of course, that release of energy would amount to a sizable break to the upside or downside. I believe it will be to the upside as we see this market once again trade and flirt with 1300. That's my initial goal on this trade, is to see the marketplace rally back to approximately 1300 to 1305, the former top of the last rally. We have certainly seen gold consolidate this week after hitting that high above 1300 and trading lower on the day. We're looking at a weekly chart. This weekly chart is what we tend to call our big picture. And the whole idea behind it is to see if recent activity has genuinely affected any of our long-term perspectives, goals, and targets. And I have to say no. What we're looking at is we did have this breakout, the compression triangle, and that compression triangle is what took gold prices above 1300. Of course, the market did come down, but is still well above the lower end of the apex, as well as the former resistance line, which now should in fact become support. And we'll go ahead and blow that up so you get a better idea. Now, in terms of a negative aspect to the market, when we look at this week itself, because the market last week hit that high at about, 1305, this week high about 1288. We are getting a red candle, although we're closing well off the low, and that's the positive note. But we do have somewhat of a three-river evening star in our weekly candlesticks. But because we have such a firm and resilient move to the upside following yesterday's downside move, my sense is that this is not a pattern that we really need to be overly concerned with. We need to watch it, but at the same time, I am still bullish overall. And for that reason, my recommendation is to maintain your current long position in gold, maintain your current stop. Dollar index higher on the day today, which is interesting because we do have a nice rise in the precious metals, overcoming about a 0.4% rise, 94.56. Gold has risen $10 with tremendous headwinds in terms of dollar strength. This, of course, is a daily chart that we're looking at, and it is of the dollar index. Dollar index closing up about 0.5%, 94.61. Now, when we look at the Kitco Gold Index, and that's what I'm bringing up right now, take a look at how a strong dollar has affected the current price of gold. We have to subtract about $6.20, and that's at 0.5% rise in the dollar index. But it's more than overcome because genuine buying in the market has amounted to a 1.3% gain on the day, or 1640 in terms of the net rise. And so that gives us our overall, or the full rise. And the net rise, of course, would then be $10.20 once you subtract the strength of the dollar index from the current price of gold. So we have had a pretty superlative day in the precious metals markets across the board, except for palladium, I should say, being able to overcome dollar strength on the day. Silver currently trading higher on the day, up about 15 cents at 1708. It is traded to a low of 1685 and a high of 1717. So as you know, we have stayed out of silver on this last trade. When we issued our buy recommendation, it was for gold only, not gold and silver as we did last time. And I wanted to explain a little bit of the rationale behind that. When we look at this chart, daily chart, and this of course is spot silver, you can see that we have truly, since we hit these highs at about $18 per ounce, market came down a little bit, and then we went into this alternating candle color, red, red, green, red, green, green, red, green. So that tells me that we have a defined and narrow range within the market that we're not able to break out. Now, unlike gold, which when we looked at a chart had a series of lower highs, had a series of higher lows, we're getting really almost a flat top in terms of the highs here and a flat bottom in terms of the lows. And so that tells me that silver could trade sideways even with gold rallying. We wouldn't expect to find the same type of performance or percentage gain in silver. Crude oil has had a wild ride over the last couple of weeks, trading dramatically higher, breaking above $46 per barrel. However, today off about 1% on the day, trading off by about 43 cents per barrel at 46.27. Interestingly enough, one of the things that we have been looking at throughout the entire week is the fact that we have seen almost a negative correlation between the recent rise in crude light and equities markets coming under pressure. If you recall, really starting the middle of February, we had a dramatic rise in U.S. equities and a dramatic rise in crude oil. There was a high correlation between crude oil and U.S. equities. Over the last couple of days, if you notice, crude oil has been moving higher, and we've seen the equities under pressure. Today, again, another triple-digit lower close in the Dow Jones Industrial Average. Now, I had originally perceived and believed that we would see some real resistance at about 46. Traders were absolutely above that point at this time. However, I still believe that this is an area that we should see some underlying weakness in crude oil rather than strength. An interesting end to the week in U.S. equities, which have absolutely been under pressure for the better part of this week and ending on a sour note, so to speak. Dow Jones Industrial Average down 180 points at 17,539. Standard & Poor's also trading lower on the day. That's off by about 16 points at 2042. The last chart that I do want to look at on today's show is a simple candlestick chart, E-mini Standard & Poor's 500, off about 0.75%. 2044 looks like where we will see this market close. Absolutely hit a tentative top when the market hit 2100. My sense at this point is that we are in some sort of correction, and I've got a couple of reasons that I believe that. First of all, our close is below, and we talked about this all week, that this is a key area we want to look at, is whether or not the equities in terms of a technical level can hold above a 50-day moving average. That's what we're seeing, and the fact that it is broken below this price point, I believe we could see equities trade lower next week, possibly going as low as about 2011 on the Standard & Poor's, and that would give us some sort of an A, B, C type of correction before moving to higher ground. So I am looking for equities to have some weakness in the market next week. No doubt a most interesting week across the board in the markets that we look at. Gold is going to close higher on the day. We're looking at COMEX for the close, $1275.20, up about $4, and that change is different, but the price is the same as when we look at spot. Traders, maintain your long position in gold, maintain your current stop level. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.